Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns in Nifty, Bank Nifty, as well as on the different asset classes. Now, first of all, let us discuss what we have mentioned in our last video. In our last video, that we have mentioned that Nifty has been stuck in a range, particular range of 18,300 on the upside and 17,700 on the downside, and market needs a breakout on the either side before the union budget. Now, to be very frank, we were expecting a breakout on the upside. For initially for 2 days, Nifty did rally, but last week was a truncated week, and then some negative news came in, and market started sliding severely on the last two trading sessions. And Nifty ended on a negative note, and it has given a breakout on the downside, which we were expecting a breakout to be on the upside. So maybe most probably we were expecting that Nifty could break the levels of 18,300 on the upside, but the closing was below 17,700. So definitely the trend has become slightly weak. But now let us go to the daily charts and try to figure out what could be the trend further from these levels, because the global markets were positive, but due to the negative news in the markets, Nifty ended on a weaker note. So now let us go to the Nifty daily charts and try to figure out what could be the trend for the next week, and what are the probabilities that Nifty could see a counter rally from the lower levels. Now let us see this Nifty daily charts. This is the Nifty daily charts. We have been discussing regarding this consolidation. Just look out for this cursor, consolidation of the 3 weeks, and we have seen a negative closing that was supported with volumes. So a breakout on the downside supported with strong volumes is indicating that we might see some sort of further follow-on selling from these levels. So most probably the sentiments would remain weak. This is the daily charts. Now let me go to the weekly charts. The weekly charts is also showing a similar kind of weakness from these levels. The candle is engulfing bearish candle of the last 4 weeks. So this is most probably a weak pattern on the weekly basis. Now let us again go to the Nifty daily charts and figure out what could be the trend from these levels. Looking at this particular closing, the opening on Monday could be either flat or negative. After opening, we might see fall off selling, but you can see that this RSI is just nearing its oversold territory. It is not in oversold territory, but once another 150 or 200 points of correction in Nifty will bring in RSI into oversold territory, and from those levels we might see a counter rally or a technical pullback or a short covering bounce from the lower levels. So one needs to be cautious while going short, because this was a sharp sell-off in the last two trading sessions. Anybody who is luckily short should try to book profits if Nifty trades near, say, almost 17,400 mark. If we see 17,400, then if anybody is short in the markets, so try to book profits, because from lower levels we might see Nifty bouncing back in the form of short covering, because this is the first week after the monthly expiry of the January series, and we have entered into February series, and on 1st February there will be union budget. So market might see high volatility till at least till the budget, and then we might see a clear direction. So as of now, one needs to be cautious. Anybody who is short should try to book profits near the levels of 17,400 at the lower levels. Now friends, let us discuss the important supports and resistance level in Nifty for the next week. The first support in the Nifty is placed at 17,493. Below that, the second support is placed at 17,328, and third support is placed around 17,098, 17,098. Whereas on the upside, the first resistance is around 17,771. Above that, the second resistance is around 17,888, and third resistance is around 18,018 is the third resistance on the upside. So these are the important supports and resistance level in Nifty. Now, friends, let us discuss the derivative data of Nifty, we'll try to analyze the calls and put data, implied volatility, open interest, and we'll try to figure out what could be the important support or strong support in Nifty and strong resistance in Nifty, looking at the calls and put data. Now you are seeing Nifty calls data. Now in this data you can see that action was seen in 17,700 calls, then 17,800 calls, 17,900 calls, and 18,000 calls. Now here you can see there was a rise in the open interest. Volumes are also strong. Implied volatility is also shooting up. It is between 19.45 to 19.65. But the most important thing is implied volatility is exploding, whereas the option premium are drastically falling, which is clearly indicating that the smart money might have done strong out of the money call writing. So looking at this volume and option open interest data, we feel that from these levels on the upside, 17,800 could act as a major resistance. If Nifty crosses 17,800 on the upside, then only we might see a short covering bounce towards the level of 18,000. Till then, we feel that Nifty might remain below, or there might be aggressive selling around 17,800 mark if there is a pullback from these levels. So on the upside, 17,800 could act as a major resistance. Now let us discuss what we have observed in Nifty puts. In Nifty puts, the action was seen in 17,500 puts, then 17,400 puts, 17,300 puts, and 17,200 puts. Now here also you can see there was a rise in the open interest. Some sort of open interest shedding was also seen in 17,350 puts. Implied volatility has already exploded. It is between 19.81 and 21.22. But here, most important thing is that the percentage change of the Nifty premium, Nifty put premium, are on the positive side. So this is clearly indicating that smart money might have bought the Nifty puts. So they are still expecting a downside from the current levels. So what could be the potential downside? So looking at this data, you can see that the volumes 17,500 is the very important strong support. You can see the concentration of volume, 22 lakhs of volumes is seen in this particular option, and after that 17,400, which we have been looking at on the charts also. So on the downside, we feel that 17,400 could act as a major support, whereas on the upside 17,800 could act as a major resistance. So before the union budget, Nifty might trade in the range of 17,400 on the downside and 17,800 on the upside. So if breaks 17,400, then it can slide back to 17,200. And if it breaks 17,800 on the upside, then it can rally towards a level of 18,000, which is the psychological mark. But looking at this particular overall charts, overall Nifty derivatives data, we feel that high volatility cannot be ruled out next week, and market might move zigzag looking at this particular data. So again, we feel that anybody who is short should try to book profits near 17,400, and anybody who wants to play the counter rally or a bounce back rally should try to buy Nifty near 17,400 mark. So we are expecting a bounce back near 17,400 mark. So anybody who wants to play a pullback rally can buy Nifty around 17,400. So friends, now let us go to the Bank Nifty daily charts, and then we will try to analyze what could be the trend for the Bank Nifty in the next week. Now this is the Bank Nifty daily charts, which we have been discussing for the last couple of months and last couple of weeks also. Now here, let me just check the charts. So you can see last week we have discussed that Bank Nifty was in the range. We were expecting a breakout on the upside. Breakout did happen for 2 days, and last two trading sessions we have seen that Bank Nifty has tanked down very sharply. It has corrected almost more than 2,500 points. So from 42,800 Bank Nifty corrected till the levels of almost 40,100. So it has corrected significantly in the last two trading sessions. And you can here also you can see that RSI has already entered or tested the oversold region. So as I said, the setup is oversold. Any further gap down opening or those who are short in Bank Nifty should try to book profits at the lower levels, and one should wait for a counter rally from the lower levels. So now let us discuss the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is placed at 40,148. Second support is placed at 39,848, and third support is placed at 39,555. So these are the important supports and resistance level in Bank Nifty for the next week. Any further corrections from these levels, one should try to book profits. Those who are short in Bank Nifty from these levels, one needs to be cautious while going short, or one should at least avoid going short at these levels, because already, as I said, that on the daily charts, Bank Nifty RSI has already tested the oversold level, and from these levels we might see a counter rally which might bring in short covering from the lower levels. So friends, now let us discuss the option data or derivative data of Bank Nifty. In Bank Nifty call option, you will see the action was seen in 40,500 calls, then 41,000 calls, then 41,500 calls. Now here you can see there was rise in the volume, there was rise in the open interest. Implied volatility is already in the danger zone. It is trading between 28.77 and 29.60, and you can see there has been a significant drop in the option premium. You can see the percentage changes. Now, as I said, Bank Nifty has already entered the oversold territory, have tested those territory. Implied volatility is already into deep oversold region. So a counter rally or a pullback rally or a short covering rally cannot be ruled out. So one needs to book profits, those who are short in Bank Nifty. If on Monday, if we see a flat opening or a negative opening, one should immediately book profits in Bank Nifty shorts. So now looking at this data on the upside, as I said, looking at this data, 41,000 could act as a major resistance on the upside, because you can see there has been a strong volume concentration. Open interest is also shooting up. Implied volatility is also high. So on the upside, 41,000 could act as an immediate resistance. Uh, and if it breaks, then we might see a further short covering rally. So at least from these levels, we might see Bank Nifty testing the levels of 41,000, because it is into an oversold territory. Now let us discuss what we have seen in Bank Nifty puts. You will see that action was seen in 40,000 puts, then 39,500 puts, then 39,000 puts. Now here also you can see there has been rise in the volumes, rise in the open interest. Implied volatility is already shoot up. It is in the danger zone. It is trading between 26.85 to 29.97. Now here you can see there has been a sharp rise in the option premium. The sharp rise of the Nifty put option premium is clearly indicating that smart trader have bought Nifty puts. So they are still expecting weakness from these levels, but there is no sign of particular what we call as put writing. Yes, there is some signal of put writing in 39,100 puts, then 39,200 puts, and 39,300 and 400 puts. You can see there has been a significant drop in the option premium. So, but looking at this particular overall major data, we feel that on the downside, looking at the volume setup, 39,000 could act, 40,000 could act as a major support because there has been a strong support area. There has been a volume concentration. So from 40,000, we might see if there is a further sell off, Bank Nifty might bounce back from those particular levels. So maybe if there is a 300 or 350 point correction on the downside from this particular level, one should try to book profits in Bank Nifty shorts and try to go long, or try, if anybody wants to play a counter rally or a pullback rally, then should try to buy near 40,000 if Bank Nifty opens or takes supports around those levels. So overall, looking at this data of Bank Nifty charts and Bank Nifty derivatives data, we feel that both the markets, I mean to say both the indices, Nifty and Bank Nifty, are slightly entered the oversold territory. A major downside is not seen. Yes, some sort of weakness could be seen. That weakness is an opportunity for short sellers to book profits, and then we might see, some sort of pullback or short covering bounce from the lower levels. So these are the particular observations which we have seen, and we might not see a sharp rally, but we might see a counter rally. So next week is the union budget, so one needs to be highly cautious, and volatility cannot be ruled out. So definitely one should try to book profits those who are short, and then where the market is taking support, if the intensity is narrowing down, then one should try to play a pullback rally or a short covering rally. So friends, now let us come to the final segment of our show, which is positional call. I have identified one stock from PSU Bank. The name of the stock is SBI. Now you will see on the daily charts, SBI has corrected sharply from the highs of 630, and it has taken a support around 539. Now here you can see that the stock has been moving in this particular rising channel, making higher tops, higher bottoms, and from the midway it has corrected sharply in the last two trading sessions. So since last since last 2 years, SBI has bounced back multiple times. You can see here, just look at the cursor. First time, second time, third time, and again this is the fourth time SBI is just coming near its support trend line, which was maintained since last 2 years. So again in RSI also you can see the cursor in this RSI has also entered into deep oversold territory. I'm not saying that it will bounce from these levels, but if there is a further correction from these levels, if SBI settle down near this particular downward support trend line, which is almost coming around 510 or 515, that should be the area where long-term investors can accumulate the stock for long-term investors. So looking at this price, volume, RSI data pattern, we feel that currently the stock, I mean to say State Bank of India, is quoting around 540. If there is a further sell-off, if stocks settle down around 515 to 510, that should be the right area to accumulate for long-term investment. So for investor, one can buy SBI on dips to 510 to 515 for an upside target of 604 to 605 for long-term investment. So this is an investment call. Traders should or investors should wait for further dip and then accumulate for long-term investment in the mentioned range. So friends, thank you very much for watching the show. Any comments you can give in the comment box, and have a nice trading week. Thank you.